The MACD indicators is a popular tool for traders in the US stock market, and understanding how to use it can help improve trading decisions. The MACD, which stand for moving average considered difference in, is a monument indicators that show the relationship between two moving averages of a stock prices. It is mainly used to identify trends and political buy or sell signals. The MACD constant of three compound. The first is the MACD line, which is calculated by subtracting the 26 days exponentially moving average from the 12 days the exponentially moving average. The second is the single line, which is the 9-day exponentially moving average of the MACD line. The third is the histogram, which represent the difference between the MACD line and the single line traders. Traders often look for crossovers as trending signals. When the MACD line crosses above the signal line, it is considered a bullish signal, indicated a political buying opportunity. Conversely, when the MACD line crosses below the signal line, it is considered a bearish signal, suggesting a political selling opportunity. Another is also a useful part of the MACD. Traders watch for changes in the histogram to understand the strength of the trend. If the histogram bar are increasingly, it suggests that the trend is gaining movement. If